So good afternoon, everybody. My name is Mike Kovacs. I am with the New Jersey Division of Taxation. The unit I work for is called Taxation University, and we handle all of the external outreach events regarding personal tax, business tax, property tax relief for the division, as well as all of the internal training for existing employees and new hires. So we're very into tax education. And with me on the back end is my colleague, Sally Villa. She will be monitoring the chat feature. So if you have any questions throughout the presentation, you can post them in the chat for Sally. And if it's something that she can easily answer, she will do that. If it's something that may take a little research, we may have to get back to you. If we have time at the end, which I don't know if we will, we can take questions live then. But again, she'll be answering anything in the chat. She'll also be posting contact information, helpful publications, things like that. So with that said, good afternoon, everybody. Let us get started. We're going to talk about online businesses and New Jersey sales tax. So what are we going to talk about today? We're going to talk a little bit about registration, because of course, to collect sales tax in New Jersey, you have to be registered with the Division of Taxation. We're going to talk briefly about what sales tax is. We're going to talk about sales and shipping. Since we're focusing on online businesses, you're obviously going to be shipping your products to people in New Jersey and outside of New Jersey. So what are the ramifications of that tax-wise if you're selling stuff outside of New Jersey? We'll get into that. We'll talk briefly about use tax. What is that? We'll talk very briefly about exemption certificates. And at the end, we will go into, once you collect the sales tax for New Jersey, when and how do you actually file and pay it and give it back to the state? So have you registered? So your business must be registered in New Jersey if you're either conducting business in New Jersey, whether you're here or stationed outside. If you're doing business in New Jersey, you should be registered. If your business is outside of New Jersey but maintains a place of business in New Jersey, you need to register with New Jersey. If you have employees that are working in New Jersey, your business needs to be registered with the state. Or if your business owns a business property, such as a warehouse or a distribution center, you need to be registered for New Jersey. So basically what we're talking about here is nexus. If you have nexus to the state of New Jersey, for the most part, your business needs to be registered with New Jersey through the Division of Taxation. So if you need to register your business in New Jersey, the form you're going to fill out for tax purposes is called the NJ-REG, NJ-REG. You can do this electronically, and that registers you with New Jersey for tax purposes. Sales tax, payroll tax, whatever taxes that you're going to be required to collect and remit and pay to New Jersey, that's the form you register, NJ-REG. If you are collecting sales tax, once you fill this form out, you'll get a temporary certificate of authority to display for your business or to just have on file. And we will mail you your permanent one, which you'll receive 5 to 10 business days after registration. So as soon as you do register properly with New Jersey, you don't have to wait until you get your certificate of authority to start doing business. You can start immediately. So let's talk about sales tax. What is sales tax? Well, it's a tax that's imposed on sales of taxable tangible personal property and certain services. This presentation is obviously fine-tuned for online businesses. So I'm assuming what most of you are probably selling is property instead of services. So we're going to focus more on property, but you can really only be selling two things, right? Some kind of product or your service. And sales tax is what we call a trust tax in New Jersey. When you register to collect New Jersey sales tax, you are basically a trustee for the state of New Jersey. You're basically a subcontractor. We're authorizing you to charge and collect sales tax from your customers and then hold it for us and remit it back to us on a quarterly basis when the sales tax filing is due, which we'll talk about at the end. So it is what we call a trust tax. It is never the business's money. And this is where a lot of businesses can get in trouble. Maybe they can't pay their payroll one month, so they dip into their sales tax collection and they pay their payroll through that. Not a good idea to do that. Sales tax is never the business's money. If possible, I would keep the sales tax that you collect separate from the other income from the business or the payroll or things like that. So when it is time to remit it, it's a little more easier than going into all of your business accounts and trying to separate what was the sales tax and what wasn't. So keep good records. The person required to collect taxes who we deem a responsible person. So if there is any litigation or hearings down the line for whatever, that will be the person that we'll need to talk to. Let's see here. Failure to remit sales tax can result in penalties and interest, and in some cases criminal charges, but we're not going to really get into that because you guys are going to have that problem. So sales tax in New Jersey, most important thing to know first off is what is the current New Jersey sales tax rate? And since January 1st, 2018 until now, it is 6.625%. So if you are selling something to a client that is subject to New Jersey sales tax, you of course can choose to charge them whatever you like. If it is a taxable product, you're simply going to take the price you're charging them, multiply it by 6.625%, put that on the invoice as New Jersey sales tax and collect that as well. And like I said earlier, separate the sales tax from the actual profits from the business. So when it comes time to remit it back to the state, you make it a little easier for yourself. The sales tax rate can change I was going to say anytime, but mostly when the budget passes is when they do things like that and announce it. So there will be links at the end of this, contact information that I highly recommend that you subscribe to or follow so you can be up to date on any changes regarding New Jersey taxes and especially sales tax. But the current rate is 6.625%. So the main concept, or one of the main concepts of sales tax for New Jersey, you're not going to find this in print anywhere, but it's something that we found to be true, is that products sold in New Jersey, for the most part, are subject to sales tax, unless you can find somewhere in the law that specifically says, no, this product is not subject to sales tax. So what I'm saying is most products sold in New Jersey are subject to sales tax. The ones that are not are the ones that are specifically exempt. The inverse of this, which I won't get into since we're going to focus on products, is most services are exempt from sales tax unless the law says they're not. But again, we're just going to focus on products. And I have it linked in various slides, but if you're wondering what you're selling, if it is subject to New Jersey sales tax or not, we have many sales tax publications on our website, which is nj.gov/taxation. And in there, under resources, is a publication called the S&U-4. I'm sure Sally is already posting that in the chat. The S&U-4. That is our main sales tax Bible. It will tell you what sales tax is, when to file it. But most importantly, in the middle of that publication is a long list of products and services with either a T or an E next to each. If it's a T next to it, it means it is subject to New Jersey sales tax. If there's an E next to it, it means it is not subject to New Jersey sales tax. So one simple thing I want to get through first is just because you have to register to do business in New Jersey does not necessarily mean you have to register to collect and remit New Jersey sales tax. A lot of people sell things that are not subject to New Jersey sales tax. Now, being that they're selling them in New Jersey, they're required to register with us, but that is not to say that they're required to register for sales tax. So make sure when you do register, if you haven't registered already, that when you get to that sales tax question, you're answering it correctly. We can change it after the fact if you answer it incorrectly. But again, it's just easier if you do it right the first time. So how do we define products legally? We define products as tangible personal property. And that again is defined as any items that can be seen, touched, weighed, measured, perceptible by any of the senses. I've got a mouse here, a microphone, a laptop, a pen, a cup. These are all examples of tangible personal property, and they are all subject to sales tax. There are some more common examples. Furniture, subject to New Jersey sales tax. Automobiles, cars, boats, and vessels, subject to New Jersey sales tax. Electronics, televisions, entertainment centers, things like that, subject to New Jersey sales tax. Tools, electronics, subject to New Jersey sales tax. What's not? Well, I can't go through everything that's not, but the most common items that people sell that are not subject to New Jersey sales tax are clothing and footwear for everyday use. That's important. So pants, blouses, shirts, skirts, shoes, things like that for everyday use, not subject to New Jersey sales tax. So say for instance, you are starting a business and all you're selling is clothing or footwear that's exempt, you're required to register your business with the state of New Jersey. But when you get to the sales tax question, will you be collecting New Jersey sales tax? You would answer no if this is all you're going to be selling, because you're required to register because you're doing business, but what you're selling is not subject to sales tax. If you sell items, some of which are subject to sales tax, some of which are not, you're going to answer yes to that question. If you're selling anything that's subject to sales tax, you have to answer yes. So this is clothing and footwear for everyday use. It does not include sports equipment or apparel. So baseball cleats, ice skates, things like that are obviously not clothing for everyday use. They will be subject to New Jersey sales tax. The other common product not subject to New Jersey sales tax is food and food ingredients that is going to be prepared by the purchaser. So food sold in an unheated or unprepared state, most of the stuff that you find in the grocery store is not subject to sales tax. This doesn't include prepared foods though. So if you are starting a restaurant, that's all subject to sales tax. At the bottom of the screen is a link you can follow to the SNU4, that publication I talked about, our main sales tax guide. That's going to have that list of exempt and taxable products and services. So since we're focusing on online businesses, we're going to get into sales and shipping. So one of the main things you need to be aware of is if you are registered to collect New Jersey sales tax, New Jersey sales tax A is only due on items that New Jersey says are taxable in the first place, right? So no clothing for everyday use, things like that. And you only need to collect New Jersey sales tax on sales that are being shipped to for use to customers in New Jersey. That's very important. If your business is located in New Jersey and you're shipping taxable products out of state, that does not mean you need to collect New Jersey sales tax on it. New Jersey sales tax is only correctly charged and collected when you ship taxable products or products that we already deem subject to New Jersey sales tax to customers for use in New Jersey. So if you are selling these items and they're going outside of New Jersey, you do not need to collect New Jersey sales tax on those transactions. Now, do you need to collect whatever state you're shipping that to? Do you need to collect their sales tax? You may. I work for the New Jersey Division of Taxation. I can't really answer that. I can't help you with that. So my advice is if you are in that scenario where you are in New Jersey and you are shipping products that are taxable to New Jersey out of state, you should absolutely call that state's Department of Revenue, Division of Taxation, whatever they call it, and tell them what you're doing. And we'll go through this a little further in the presentation, but they'll probably give you a questionnaire. Well, how often are you doing this? How much sales are you receiving from our state? And based on that, that may determine whether you have to register with that state and whether you have to collect that state's sales tax and remit it to that state. But all I can tell you as far as New Jersey goes is once it's out of New Jersey for use outside of New Jersey, no New Jersey sales tax should be collected or charged. So if you are shipping items, what if you are shipping it in New Jersey and it is taxable? Do I have to charge my customer sales tax if I am choosing to charge them shipping and handling fees, delivery charges, things like that. That is all dependent on the taxability of the item you're selling. So if you are shipping an item that is subject to New Jersey sales tax, and it's going to somebody for use in New Jersey, and you are choosing to charge them any additional charges, and these are optional charges that have nothing to do with the state of New Jersey, this money does not come back to us. It's for you to recoup any expenses that you incurred facilitating the transaction. You know, if you have to pay money at the post office to ship it, if you have to do certain things, you're obviously going to have to buy equipment, you're going to have to buy boxes, packing material, things like that. That's all money coming out of your pocket. So you may choose to charge your customers additional charges to recoup your costs for those. That's perfectly fine. As far as sales tax goes, whether you should charge sales tax on those separately listed charges, again, is dependent on the taxability of the item itself that is being sold. If the item itself that's being sold is subject to tax, any additional charges, shipping and handling, delivery, what have you, are subject to tax as well. If the item that's being sold is exempt, then those charges, you can still charge them. That's fine to recoup any expenses you incurred, but you should not be charging New Jersey sales tax on them. If you have a shipment of items going to somebody, some of which are taxable, some of which are exempt, then you can either use the sales price or total weight to determine what percentage of the bill or what percentage of what I'm billing the customer should I charge sales tax on. So to make it easy, say you're selling 50% of what you're shipping is subject to sales tax, 50% of what you're shipping is not, you would charge sales tax on 50% of what you are charging the customer. That's an easy example. No, there it was there. Out-of-state sales. I already talked about this a little bit, but I'm not going to go through this whole chart. I will give you a second here if you want to take a snip of this or a screen capture, because this is from our out-of-state, or ANJ-10, our publication for out-of-state sales. And it goes through pretty much every possible scenario from the state of purchase, the residence of the purchaser, if they're registered, and if New Jersey sales tax is due. So this is an excellent resource. If you can't capture it now, again, the publication you want to look at for our out-of-state sales is called the ANJ-10. And again, that can be found on our website, nj.gov/taxation. So let's talk what we came here to talk about today, basically online sellers. You guys are what we call remote sellers. A remote seller is a business that sells taxable products either online through mail order, if people even still do that, or over the telephone. So basically, remote sellers are people that have no physical location in the state, and you're selling to a customer in a state and the seller has no physical presence. So we're in New Jersey. If I'm shipping stuff to Pennsylvania, and I don't have any physical presence in Pennsylvania, I just have, maybe I have an office in New Jersey, maybe I don't, maybe I just work out of my house. And that's a good point too. Whether you have a physical brick and mortar business or you're working out of your home, selling things that way, has absolutely nothing to do on the sales taxability of items or services. If it's subject to tax, it doesn't matter if you're mailing it, if you're selling it out of a store, if you're mailing it from your home, if you're shipping it, if you're selling it in person, does not affect taxability. If it's taxable one way, it's taxable the other. So a remote seller is anybody that's selling products not face-to-face through these methods, either online, mail order, or telephone, to a state where you have no physical presence. You are called a remote seller. So what are the requirements? I'm assuming most of you here are residents of New Jersey, but if not, say you are a resident of Pennsylvania and you're shipping items to New Jersey. So we now consider you a remote seller. What is New Jersey's thresholds for these other non-resident state remote sellers to have to register with the Division of Taxation? If your gross revenue in the current or prior calendar year exceeds $100,000, and this includes all sales to New Jersey, so taxable and non-taxable items, you're going to have to register with the state of New Jersey. Or if you had 200 or more separate transactions in the current or prior year of any amount, so we're not even talking about this $100,000 figure anymore, you need to register with the New Jersey Division of Taxation. And for more information on that, if you have a copy of these slides, we have a link to the law down here and also the Wayfair court case. So what about an out-of-state remote sellers? So what if you are selling to, like I said, Pennsylvania, Delaware, Wisconsin, whatever? Again, I work for New Jersey. I really can't get into the specifics, but if a New Jersey business, and again, you're a New Jersey business, whether you have a storefront or not. So if you're just selling out of your home, that's the same as if you had a store in New Jersey. That has no bearing on sales tax or whether you have to register or not. So if a New Jersey business meets another state's threshold, just like I showed you for New Jersey on the prior slide, and you're required to register with that state or join what is called the Streamlined Sales Tax Program. And the Streamlined Sales Tax Program, and it's a whole separate administration, is basically a joint conglomeration of many states. New Jersey is one of them, that make it easy for individuals and businesses like you that are selling to states all over the place. And so you don't have to call up each state and be like, well, you know, I'm doing this, I'm doing that. Do I have to collect yours? They make it easier for you in a streamlined way if you're selling to multiple states to tell you, you know, which state taxes you may have to collect, how to register, how to remit that. They'll help you very much out with them. So items to note when reviewing the requirements. Many other states base their thresholds on sales or transactions, and some states base it on sales and transactions. So there is not one common rule I can give you for every state that's going to tell you whether you're required to register with them. So if you are, again, dealing with other states, you need to contact that other state, or at least check out the Streamlined Sales Tax Administration website. Other states may base their sales threshold on gross sales, gross revenues, gross receipts, retail sales, taxable sales. Many states do not distinguish, as we do, between taxable and non-taxable sales when determining if a threshold is met. So just keep that in mind. And there's a very helpful link at the bottom here from the Streamlined Sales Tax website that will give you further guidance on remote sellers. So out-of-state sales, but what if you're not a remote seller? So, but you're conducting business in New Jersey, or you need to obtain a New Jersey license to conduct business. You must register with New Jersey. So now I'm not really talking about remote sellers. I'm talking about non-resident out-of-state businesses that are doing business in New Jersey. They're either conducting business in New Jersey, entering contracts with other businesses in New Jersey, or trying to obtain a license to conduct business in New Jersey. Then you must register with New Jersey, especially if what you're doing is going to create what we call nexus with New Jersey. And especially if you're going to, at some point, going to have physical presence in New Jersey, that absolutely establishes nexus. So marketplace sellers, this is really important. Marketplaces, Amazon, they make it very easy for individuals that are remote sellers to comply with sales tax. So if you are going to do business with these marketplace sellers, Amazon, Walmart, there are thousands of them. You may enter in a contract with, I'm just going to use Amazon for example. You may enter into a contract with that marketplace seller, and then the onus is on the marketplace itself, in this case Amazon, to collect the sales tax for all the states that you are shipping your products to. So if your business is picking up and it's something that's going beyond what you can handle and keep track on, you may want to enter into a contract with Amazon if you're selling your items obviously through them. And then if you're selling it to any state, country, whatever, you just focus on your business and they will focus on where the product's going If sales tax needs to be charged and collected, they will collect the sales tax for you. They will file the sales tax for you as well, unless it is specifically stated in your contract that they will not. So this is something, again, that is very important, that is a great asset to remote sellers, is entering into a contract with these marketplace sellers. And again, if they don't specifically state that they're not filing these sales tax returns on your behalf, it means they should be doing that. But you want to double check and make sure you're doing that when you enter the contract, when you enter into the contract for them. So out-of-state marketplace sellers, so they must register and collect tax if they enter into a customer referral agreement with a New Jersey business and they receive New Jersey sales in excess of $10,000 from referrals. So these are the requirements for out-of-state online marketplace sellers for New Jersey. This is the requirement that they have to register. And again, if we're talking about Amazon, Amazon is already registered with New Jersey. So this is really nothing that you have to really worry about. But if you are maybe dealing with a marketplace that is not Amazon, that is not as popular, hopefully they are aware of this. Use caution if you're doing business with other states, because they're going to have similar laws and thresholds like I just talked about. That's going to determine whether you need to register with them and collect that state sales tax, if that state even has a sales tax. And that brings me to another important point. Just because something is taxable in New Jersey doesn't mean it's treated the same way sales tax wise in other states. For instance, clothes are not taxable in New Jersey for everyday use. However, they are taxable in New York. So based on where you're shipping it, could change the actual taxability of the item being sold. Something you're selling that's not taxable to New Jersey may be taxable when it's being shipped to another state. So again, it's something else you're going to need to keep a lookout for. I'm going to talk very briefly about use tax, and I'm only going to talk about the second example. You're buying inventory to sell to other people. And this is going to make more sense when I talk about exemption certificates. If that inventory is subject to sales tax and you use something called an exemption certificate, in this case, a resale certificate, you're basically making a promise when you give that person or that business a resale certificate stating that, first of all, sales tax can only be charged to the end user or the ultimate consumer. It can only be charged once. So say you are buying items from a wholesaler for you to sell, and these items are subject to sales tax. When you buy them from the wholesaler, you're going to give them what we call an ST3, a resale certificate, stating, I'm not the end user, I'm not the ultimate consumer, don't charge me sales tax. When I sell these items, I will then collect and charge the appropriate sales tax. That's all fine. So when you do sell these to actual customers, you're going to charge them sales tax. Now, what if you take something out of that inventory for personal use? You've now broken the agreement of that resale certificate. So you may owe what we call use tax. Use tax is really just sales tax by another name. So to make this easy, if you are in that situation where you gave a resale certificate to another business, to another individual saying, don't charge me sales tax. When I sell it to the end user, ultimate consumer, I will charge sales tax. But instead of selling it, you take it out of inventory for personal use. You've broken that agreement. You now owe the equivalent of what you would have charged them sales tax on as use tax. So it's the same rate. It's 6.625% because use tax is sales tax. The correct and full name for sales tax in New Jersey is sales and use tax. And I don't want to get any more into this because I don't want to confuse you guys. But just know use tax is a thing and it does exist. And it will make a little more sense when I talk about what I'm going to talk about right now, exemption certificates. We have many exemption certificates on our website, which I will show you in a few minutes. But like I just stated, sales tax in New Jersey is collected from who we deem the ultimate consumer or the end user. So an item can go through many different hands and transactions until it gets to that person. Sales tax should not legitimately be charged until it reaches the ultimate consumer or the end user. And I do have a chart that's going to illustrate that a little better. But what exemption certificates allow you to do, and I just briefly mentioned the ST3, the resale certificate, is they allow business owners and individuals to purchase taxable items and services that may be exempt from sales tax under certain conditions. And businesses or individuals can use these, again, to make qualified purchases without paying sales tax. And I do have an example for you. Here are some of the most commonly used exemption certificates offered by New Jersey. I briefly talked about the ST3, the resale certificate. We also have one called the ST4, the exempt use certificate. And if you remember earlier, I talked about you buying packaging equipment. That is what you would use the ST4 for. If you are buying items that are ancillary to the actual sale, but are needed to keep the sale or shipping, not break the item, things like that. So if you're buying boxes, styrofoam peanuts, bubble wrap, those inflatable bags of air, that is stuff that you're buying out of your own pocket at the business's expense. You're shipping to the customer. It's not part of the end product, but it's needed to transport the end product successfully. You can use an ST4, and when you buy these items, you can avoid paying sales tax on them. And then you're obviously still going to have to pay money for these. So that is when you may want to charge your clients a shipping and handling charge to help recoup some of the costs that you incurred while trying to facilitate their transaction. Another common one is the ST5 for an exempt organization. I'm not going to get into that, and I'm not going to get into the ST8. However, if you do use these certificates, they are accepted in good faith and should be kept on file by the person using their certificate and the person receiving their certificate for up to 4 years in case you are audited. So you buy a lot of items for resale. A wholesaler near you sells items that you sell as well, and you're going to want to buy them at a wholesale cost, obviously. So you're doing a lot of business with this person. Now, 2 years down the road, the Division of Taxation could come to your business and say, well, you're buying a lot of these items and you're not paying sales tax. Why? Well, I'm selling them to resell. Here's a copy of the resale certificate that I filled out, and the purchaser, or I'm sorry, the seller filled out as well. That's fine. Audit will probably stop right there. You're good to go. So if you are using these, keep these on file for 4 years because they're your proof that you followed the law correctly and you use the exemption certificates. So let's get into a little bit more about the resale certificate. And this is the only one I'm going to go in depth on, the only resale certificate. So I already talked about the first instance, and I have a chart on, I believe, the next slide that's going to detail that further. So the first is you're buying something and you're reselling it. So you're not the end user, you're going to resell it, and you're not making any alterations to the product. You're reselling it in its present form. The other common use for this is if you're buying it as a component part of another product. So maybe you're making crafts, maybe that's your business. And you go to a wholesaler or you go to Michael's or whomever, and you're buying materials or equipment to make your products that you're then going to sell to customers. Well, when you buy this material, your equipment, you're not buying it to resell in its present form, but you are buying it as a component part to make into an entirely new product. And that entirely new product, when you sell it, will be subject to sales tax. You can go into Michael's with an ST3 when you purchase your materials to make your crafts or your products, and you can give them the ST3 and say, look, don't charge me sales tax. I'm not buying these materials to either for my personal use or to sell as they currently are. I'm buying them to make into an entirely different product than what they currently are. Excellent proper use of the ST3. So the most common uses for the ST3 are where you're just reselling something. You're not the end user, you're not altering it, or you're not the end user. And what you're buying, you're not buying to sell in its current form. You're buying to sell as a completely different product. Good use for the ST3. Again, keep it on file for 4 years in case you are audited. and blanket certificates are acceptable. And what we mean by blanket certificates are, I'll use the Michaels example again. If you're going there a lot all the time, maybe it's around the corner from your house, you don't have to keep giving them an ST3 for every transaction. You can give them one and say, look, I'm going to be doing this. I'm going to be doing business with you a lot. Keep this on file in your computer system. Of course, you're going to keep a record of the transactions that you have with them, because that's going to be important during an audit, but you're not going to be required to give them a separate ST3 on every instance that you enter the store. For more information on all our exemption certificates, we have a publication on our website called the SNU-6. So here's the example I was talking about for, and this is going with the resale certificate. So you have a manufacturer who makes a product. In this case, let's say it's a laptop. So they make laptops, they have a factory. Wholesaler goes to the factory, buys 500 laptops. The wholesaler is not the end user of those laptops. They're not buying them for personal use. They're buying them to sell to retailers. So the wholesaler will give the manufacturer an ST3 saying, do not charge me sales tax. I'm not the end user. Perfectly fine. A retailer then goes to the wholesaler. Remember, the wholesaler bought 500 laptops from the manufacturer. The retailer wants to buy 250 of those laptops. The retailer is also not the end user or ultimate consumer. So the retailer as well will now present the wholesaler with their own ST3, saying, I'm not the end user. I'm not the ultimate consumer. Do not charge me sales tax. Perfectly fine. They buy 250 laptops. They put them in their store. And again, it doesn't matter if it's being purchased in person or online, what have you. If it's going to somebody in New Jersey, when the customer actually buys that laptop for personal use through mail, in person, doesn't matter. They are the ones that are correctly charged sales tax. So for the most part, even though a product may go through many different hands, many different transactions, sales tax can only be charged on the end user or the ultimate consumer for the most part. There are some exceptions, the most common being automobiles. They're subject to sales tax every time they're sold. I'm assuming most of you are not selling cars, so I won't get into that. Here's a list of all of our exemption certificates on our website. As you can see, there are a lot of them. Most of them are used for businesses, but some of them can even be used by individuals, such as capital improvements or student textbooks. So if you are interested in finding more about these, go on our website. So we've talked about what sales tax is in New Jersey. It's a trust tax. The current rate is 6.625%. You should only be charging sales tax on taxable items. So just because you're selling something doesn't mean you automatically have to start charging sales tax. Maybe what you're selling is not subject to sales tax, like clothing for everyday use. So you do that. That's in New Jersey. Anything that's being shipped out of state is not subject to New Jersey sales tax. Whether it's subject to that state sales tax, it's something you're going to have to research yourself. We've talked about remote sellers. If you are selling things remotely, either online, through mail, or over the telephone, you're a remote seller. Remote sellers can enter agreements with what we call marketplace sellers, such as Amazon. So if you are shipping products and selling products to multiple states, that's going to be a huge headache for you to keep track of. It's not going to be a huge headache for Amazon to keep track of, though. So maybe you want to enter into a contract or agreement with Amazon, and they will handle the collection and the filing of sales tax for you. It's a very, very, very good thing to do if you are selling to multiple states. But what if Amazon is not doing that for you? What if you do have to collect your own sales tax? What if you do have to file your own sales tax? How do you do that? That's what we're going to talk about right now. So sales tax in New Jersey is due on a quarterly basis, 4 times a year. So if you have a business and if you filled out the NJ Reg, remember that was the registration form where you state if you're going to be collecting sales tax or not. If you said, yes, I'm going to collect sales tax, you have to file what's called the ST50 every quarter to report and pay that quarter's sales tax that you collected, even if zero tax is due. If that's the case, you just have to go online on our website and file what we call a zero return. Just put zeros all down the line, click submit, get a confirmation number, you're done. But sales tax is filed every quarter. So just for an example, let's talk about the first quarter. The first quarter of each year is January, February, and March. That's the first quarter. So any sales you made subject to sales tax in January, February, or March are due on the first quarter sales tax return. When is that due? Once the quarter ends, you have up to 20 days to file that quarter's return to have it be considered filed on time. So for instance, the first quarter is January, February, March. March ends, you have till April 20th to file that quarter's sales tax return to have it be considered timely. I'm not going to go through every quarter, but for instance, the second quarter. The second quarter is April, May, June. Once June ends, any sales tax that you collected for April, May, and June needs to be remitted back to the state 20 days after the quarter ends. In this case, it would be by July 20th. So everybody has to file sales tax, New Jersey sales tax quarterly. Everybody that's supposed to be filing has to file it quarterly. Some people are required to pay us monthly. They're still going to file quarterly. That's always an obligation. But because of certain amounts they made, we're a pay-as-you-go state, and we're telling them, hey, we want you to pay us a little faster than every quarter. So we want you to pay us every month. And how you meet those thresholds are if you collected $30,000 in sales tax the prior year, and you collected $500 or more in either the first or second month of the quarter, you are now what we deem a monthly payer. And if that is the case, you will be on our radar. We will send you a letter to notify you of this. So you'll have to make monthly payments for the sales tax you collected for the first 2 months of a quarter. So let's go back up here to the quarters. So again, the first quarter, January, February. Let's say you are a monthly payer. And let's say in January, you collected $600 sales tax and you are a monthly payer. That monthly payment would then be due by February 20th, because now it's due on the 20th day of the following month of which you collected it. Say in February, you again collect $600 in sales tax. That would be due by March 20th. So it's only for the first or second month of a quarter, because after that, you're still required to file the quarterly return. That's why we don't have a monthly requirement for the third month of a quarter, because the third month in this instance would be March, and any sales tax you collect in that month would be due when you have to file your quarterly return. So everybody has to file a quarterly return in New Jersey who is set up to file sales tax, even if you didn't have any sales tax due for that quarter. Some people are required to pay us monthly. Anybody can choose to pay us monthly. So maybe you don't like the thought of hanging on to the state's money for a whole quarter, a whole 3 months. If you want to go online in January and make a payment of $5 towards your sales tax, go ahead. That's fine. We're not going to turn the money down. So everybody must file quarterly. Some people are required to pay us monthly. Anybody can choose to pay us monthly. So how do you file? We have 2 methods, and I highly recommend that if you can, you use the first one online through our website at nj.gov/taxation. Or you can do it through our telefile system at 609-341-4800. To enter into these systems, you're going to need your 12-digit FEIN, which is a federal employer identification number. So any business that registers in New Jersey is going to have a business ID number. If it's a business entity, they're required to get an FEIN from the IRS, basically like a social security number for the business. It's 9 digits. To make it 12 digits for New Jersey, you just need to add 3 zeros at the end. If you were not required to get an FEIN and you did not get one, Then your tax ID number is your social security number with 3 zeros at the end, because some business types don't require that, such as a sole proprietorship or partnership. But let me just say this. If you haven't registered yet, get an FEIN, because you don't want to use your social. An FEIN, a federal employer identification number, is from the IRS. It's free, it's quick, takes about 2 minutes for them to generate one, and it's easy to do. So even if your business is not required to get one, I always recommend everybody get an FEIN. You're also going to need your 4-digit PIN, or you can use the first 4 letters of the business name, but that's going to severely restrict what you can see on our filing portal. So use your 4-digit PIN. The 4-digit PIN is a 4-digit number assigned to you after you actually register. So that's what you need to get into our sales tax filing portal to file for sales tax. So you would go to our website, and again, that's nj.gov/taxation. You would go to businesses, file and pay, sales and use tax. And again, enter your ID number followed by 3 zeros at the end. So it's 12 digits and the 4-digit PIN, and then click submit. Now it looks like a lot here, but most people are just going to be doing the first option, which is file a quarterly return. The middle section is for people that are selling boats and vessels, so I think we can just ignore that. For the people that are required or want to pay us monthly, here's where you'll be making the monthly payments. If you get a bill from us, here's where you can come to pay the bill. If you don't want to mail it in, you can certainly do it here. So when you're going to file your quarterly sales tax return, if you're filing the return around the time where the system thinks you should be filing it, for instance, if you go into the system on April 1st, it's going to think you're filing the first quarter return. So it's going to say March, and it's going to say 2023. Awesome. But maybe you forgot to file a sales tax return from a year ago. How do you do that? You click File Quarterly Return, and you put the month for the last month of the quarter you're filing for. So in this case, January, February, March. March is the last month of the first quarter. You want to file for 2023. That's going to auto-populate. That's how you file for the first quarter. But maybe you wanted to file for the second quarter of 2022. You would put the last month of that quarter. So you would put June, because April, May, June, and then you would change the year to 2022. So the takeaway from all this is, if you are filing on time, this is most likely going to be populated with the correct information. However, if you need to file for a quarter you didn't file for, a quarter you missed, you may have to change these. So the correct month to put in here is the last month of the quarter you're filing for, and you probably are going to have to change the year, of course, if you're filing for a different year. If you do enter an invalid combination, such as if I put February 2023 and I click I want to file a quarterly return, it's going to tell me it's invalid. So there are some safeguards. So once you click this and these are correct, you'll click submit and you can get into our filing system. And this is what our sales and use tax return looks like. And again, the sales and use tax return is called the ST50. And what we're asking for is total gross receipts from all sales. So maybe you sell items, some of which are subject to New Jersey sales tax, some of which are not. We want the entire sales for the quarter here. On line 2 is where you're going to back out any sales that you did not correctly charge New Jersey sales tax on. And the most common reasons for not charging New Jersey sales tax are it wasn't subject to sales tax in the first place. Maybe it was clothing. It was shipped out of state. Remember, if it goes out of state, it's not subject to New Jersey sales tax. It may be subject to that state's sales tax, but it's not subject to New Jersey sales tax. And the last one is you got an exemption certificate for it. Maybe a resale certificate. Somebody purchased something off you to resell, so obviously you did not charge them sales tax. Any sales you made that were not legitimately supposed to be charged sales tax on, you put them here. So you put everything on line 1 and any sales not subject to sales tax on line 2. So once you subtract line 2 from line 1, the leftover number should be the sales that you successfully collected and charged New Jersey sales tax on. and that figure will show up here. If you charge sales tax incorrectly, maybe you sold something that you should not have charged sales tax on, clothing. Even if you make a mistake, it's still not your money. It's still the state's money. Technically, it's the person's money that you mischarged, and they're entitled to a refund. So if you charge sales tax incorrectly, meaning that your calculations here are not going to work out, you have to put in the actual amount of sales tax you collected. If it agrees with 6.62% of this figure here, that's fine. If it doesn't, if you incorrectly charged it, you have to still remit the money to us. If you have use tax due, you can add that here. If you made any previous monthly payments, like I talked about already, you have to take credit for them here. Our system at this point is not sophisticated enough to auto-populate those. So make sure you take credit for your monthly payments. If you don't, you're going to be paying us twice, essentially. You can get a refund, obviously, but why go through that hassle? Just do it correctly the first time. You can calculate your own penalty and interest on this form. I recommend you do not, simply because it's hard to calculate. And we have things called billing thresholds where if it's under a certain amount, we're not even going to bill you anyway. So you may be assessing yourself penalty and interest when the state would not even assess it anyway. So I say, let us determine if you even owe anything at all. So I have a few examples. So here's a very easy example. My business sold $1,000 that were their gross receipts for the quarter. Everything I sold for that quarter was subject to New Jersey sales tax. So my line 2 is 0. I had no sales that were not subject to tax. I had no sales that were made out of state, and I had no sales where I accepted an exemption certificate. So I'm stating that everything I sold, I collected New Jersey sales tax on. So that's why I dropped that down here. Now I'm going to take 6.625% of my $1,000. It's $66.25. That is theoretically what I should have already collected from my customers when I charged them for each transaction. So I'm just going to keep following that amount down. There was no use tax, we'll say in this example. I didn't make any monthly payments in this example. So I owe the state $66.25. And again, it's not really what you owe. It's not your money. You're just remitting the sales tax back to us that you already collected from your customers. And here's how you can choose to pay us, either a credit card or your banking and account and routing number. And then you can click file and pay balance due. And again, remember I talked earlier about 0 returns. Maybe you didn't have any taxable sales. Maybe you didn't do any business that quarter, but you're still required to file a return for that quarter. That's fine. Just put zeros down the line here. It's not going to ask for any payment information. File and pay. You get a confirmation number. Done. Here's another example, a little more not complicated, but in depth. So you have a business for the first quarter. Your total sales from all sources were $20,000. You had tax exempt sales totaling $5,000. Sales you made out of state, sales you got an exemption certificate for, sales you made that weren't even subject to sales tax. How does this look? So $20,000 is your total gross receipts from all sources. Okay, how much of your sales did you not collect sales tax on legitimately? 5,000. All right. So theoretically, you should have collected sales tax on $15,000 of sales. What's 15,000 multiplied by 6.625? It's $993.75. And I'm putting here, okay, yeah, that's right. And that's how much I collected. We agree. Awesome. I didn't have any use tax due, so I'm putting nothing there. So I'm just bringing down my sales tax due. I didn't make any monthly payments. So come tax time, I'm going to continue filing, and I'm going to have to pay or remit the $993.75 that I've already collected from my customers in sales tax back to the state. So this is the extent of the ST50. It is probably one of our easiest tax returns with the least amount of lines. Let us connect. We have Tax E-News in New Jersey. It is a once a month email you will get related to you and your business and anything New Jersey tax related. I highly recommend you at least sign up for this. When you do sign up, you can even select which taxes you want to hear about. So maybe you only want to hear about sales tax. You can select that and you'll only get information regarding sales tax. Maybe you want to hear about all the taxes. That's fine. You'll get information on income tax, inheritance tax, sales tax, payroll tax, what have you. But go to our website, click news, subscribe to our email list, subscribe to NJ Tax E-News. Now, what if you want to contact us? Go to the same website, nj.gov/taxation. Select contact us. You have many options to contact us. You can email us, you can call us, you can write into us, or you can visit one of our regional information centers. I know Sally has already put the information in the chat, but our customer service call center number is 609-292-6400. They're there Monday to Friday, excluding state holidays, 8:30 to 5. You can call them and ask them any questions regarding anything I talked about today. You can write in. So if you go to our website and follow this, you can click on this. It'll give you different PO boxes for different reasons. You can visit a regional information center. We currently have 3, Trenton, Galloway, and Fair Lawn. Maybe you want to sit down with somebody. Appointments are preferred, but we will take walk-ins as well. So if you want to find out where these offices are exactly, you can click this visit tab and it will give you the address and plus directions and how to make an appointment. We have social media. So this is all the places you can follow us on. Again, there's our website. We have Facebook, we have Twitter. I encourage you to follow us on at least one of these. We have videos on YouTube. One of those videos is how to file a sales tax return. So if you need a refresher, because I don't expect you to remember anything I said today, go to our YouTube channel and watch the how to file a sales tax return video. And most of our videos are in English and Spanish. And we also have Instagram and LinkedIn. With that being said, that concludes our presentation today on online sales and use tax. I want to thank all of you for joining us today. I want to thank Sally for her work on the back end. Doing this for a long time, I'd rather be doing what I'm doing than on the back end, so I appreciate the work she does. If there are any questions that we can answer right now, Sally, let me know and we'll see what we can do. If not, again, that concludes the presentation. You are free to go. Thank you for having us here. Good luck with your businesses and reach out to us for any help you need. We're here for you guys. Thank you.
Michael, thank you very much. You and Sally both. And I'm glad I don't have to remember everything. I will definitely be keeping your slides and I will send them out to everybody. And we will let people know where the recording can be found because it's a wealth of information to be able to come back to. So very much appreciated. It's complex and there's a lot to it. There's a lot to it. And to do it right, it really appreciate yourself, you and Sally giving us this information.
Well, thank you. Appreciate you having us.
Great. Well, thank you, everybody. I don't see any other questions. I think Sally's kept on top of them.
All right.
All right. Thank you, everybody.